All right, Aussie Kiwi, AUD, NZD. Also looking for this Aussie pair to break lower this month. So our 109 even level, it's you can kind of see here, is roughly our high for the month so far. It's a little bit lower, but we'll just put 109 for easy measuring purposes. So I kind of drew this out earlier. So this is pretty much what we're looking at. So 106 is our target. This moves about 300 pips in the month. If we go to our monthly here, we can see the range says about 235, but that'll go up. And so as the month goes on, so we're shooting for about 300 pips this month. Might do a little bit less, but we'll shoot for 300. It's pretty reasonable. So something like this is exactly what we're looking for. You can see price really rejected this area here, just shy of 109, between like 108.70 and 108.90 kind of thing. It's rejected many times. Created this little level here, which as of Friday did enter this zone and break a little bit lower. There was a bunch of rejection here. You can see this wick here. Sorry, this is in the way. This big wick here came down and did pull back, but you can see it did create a lower low. So I'm looking for this to break down, and then putting it on the 4-hour time frame here. I mean, this is pretty much as perfect as it gets, guys. So you can see lower lows and lower highs starting as of right here, doon. So and then broke this zone. This was a heavily respected zone, and then price broke it here and then retested. So you can actually shrink this down. You can see price came, delete this for now. I really like this. I love when structure works out like this. So from here came down, made a lower low, and you can see this zone originally, this is good teaching here. So you can see price came down, and actually this was the original zone based on these wicks here, and with these these candles here, it actually pushed the zone here, right? And then you see price comes back up, retests, creates a lower liquidity zone versus this one, and then boom, knocks it lower and completely annihilates the zone. And so now it's just retesting what kind of would have been a upper previous liquidity zone. It's just kind of retesting now, so we can actually drag this over, and yeah, this is kind of all it's doing right now. And so price is above this 4-hour moving average, and I believe it's above the daily as well. So yes, so it's technically still pretty bullish, and I wouldn't short it yet, but you can see this structure here is just absolutely perfect. So once it breaks below here and is below that 4-hour moving average, so if we get a 4-hour candle that closes below this zone here, something like this, I would enter a short here. I think the momentum's there. I think on all the other Aussie pairs, they're also selling off. So I do think with everything correlating and this recent structure as far as lower lows, lower highs on the 4-hour time frame, as long as it lines up on all the other ones as well, you can see prices way below the 1-hour moving average, and you get this last 1-hour candle really rejected the zone here. So yeah, I'm just looking for price to make its way down here and then break this zone, and then I would look for a short position for sure and just target the full monthly range. So our next areas of liquidity that we have to keep in mind are right here. But yeah, once price breaks this area, I mean, and there's a few, so like this might be kind of rocky all the way down, it might be kind of slow, and it might pull back a lot. Because again, there's this area, there's all these wicks in this area, but then after we get past this one, right around 107.20-ish, between 107.20 and 107.35, once we get past this zone, I mean, there's nothing here, guys, so it's going to be straight down to 106 most likely. And this should have about between 250 and 300 pips of range this month. So between 106.50 here and then 106 even is most likely where this is going to head to finish off the month. So this is setting up really good. These are our main zones we'll keep in mind here. I'll leave them on here, and then we're just looking for price to really break this one. I want it to be on a 4-hour time frame. I want it to break below this zone, break below this 4-hour moving average, and then retest. Use this this 4-hour moving average right here is going to catch up, and then price is most likely going to reject it as well. So then we have a bunch of protection here. So I would have, and this odds are what's going to happen is price, before it breaks this zone, it's actually going to push it down. So it might push, hopefully this isn't confusing for you guys. So it's most likely going to come down, push this zone, which used to be, we'll say right here. Right now this is the current zone. What will most likely happen is price comes down, it's going to push this zone and then start to pull back and retest. So it'll be something like this, and then like this, and this is the previous upper liquidity zone as of right now. It used to be right here. So we'll see if the price respects this area, which I think it will. And then it'll create most likely a new liquidity area right below it, so something like this, and then come down, break this zone fully, and then look for a retest and something like this. So I know it's a little confusing, but what I would do is, upon all of this happening, most likely it will, you look for your entry, something like this, at this broken liquidity zone here, and then you set your stop above the previous one. So then you have lots of protection. You have this 4-hour moving average to protect us, we have this liquidity zone, and then we have one of these upper liquidity zones where price previously respected as our stop. So, and then you enter your trade like this, and you're still looking at, about a 9 risk to reward, which is huge. And I hit these all the time by just being patient and targeting the full monthly range. And if you can get in on the trade at the beginning of the month, which, this is only the 10th of the month, so price hasn't moved a ton to begin with, so it's been really slow at the start of the month, which is pretty common. And then, yeah, you just enter, based on structure and based on these liquidity zones breaking and then retesting, and then just targeting the full monthly range and making sure all the price action aligns and making sure, your moving averages. If price is below all the moving averages, then it's pretty bearish and it's, it's good to go. So you just have to wait for the right entries and make sure that you have the right liquidity areas, as support and resistance. So like this situation, you let price break this one, and then you use these ones to protect you, right? And then you don't set your stop here because that's not enough protection. You set it up above here, and then that way if price comes down, let's say it comes down, breaks this level, and then I'm looking for this retest, and let's say I enter right here at this retest, and we just get a liquidity push, and we get price to come back up, and it pushes through this zone. I don't want to be stopped out. So let's say all that happens is price comes up to this area, and then it breaks down, then we're perfect. We're still in the trade. It's still profitable, and it's moving in the direction we want it to move without stopping us out. So that is my take on Aussie Kiwi. Let me know what you guys think in the comments, and I'll see you in the next one.